It's a quiet Sunday. You've got a mug of something warm, and your laptop is staring back like a loyal dog that wants a walk. On the screen is the form that keeps America funded, and your stress level slightly elevated. The U.S. Individual Income Tax Return, Form 1040. Start with the idea, not the form. A tax return is just a story you tell the government about your year in money. You report what came in, subtract what the law allows, apply the rules to find the tax, reduce it with credits you're entitled to, and show what you already paid. If you paid too much through paychecks or estimates, you get a refund. If you didn't pay enough, you square up. That's it. Form 1040 is the cover page of this story, the table of contents that points to other pages called schedules. Think of 1040 as the dashboard and the schedules as the engine parts. Before you touch a single line, set the stage. Make one folder on your computer named for the tax year, and inside create homes called Income, Deductions, Credits, and Payments. The moment a document appears in your mailbox or inbox, drop it where it belongs. You'll want W-2s if you had an employer, 1099 NECs if you freelanced, 1099Ks if platforms paid you, 1099 INT for bank interest, 1099 DIV for dividends, 1099B or a consolidated brokerage statement for stock sales, 1099R for retirement distributions, SSA 1099 for Social Security, and any K-1s from partnerships or S-Corp. Slide in proof for deductions and adjustments, IRA or HSA contribution statements, student loan interest reports, tuition statements, mortgage interest forms, property tax receipts, charitable donation letters. For credits, tuck away childcare statements, adoption papers, education 1098T forms, and anything that proves eligibility. For payments, save every record of withholding. It's on your W-2s and 1099s, and any estimated payments you sent during the year. The goal is simple. By the time you open the 1040, your evidence is already smiling at you. Now, open the form and breathe. The first block is identity. Your name exactly as on your Social Security card, your current mailing address, and that precious number that matches the name. Choose your filing status honestly. Single, married filing jointly, married filing separately, head of household, or qualifying survivor. Status matters because it sets your tax brackets and your standard deduction. If you support a qualifying child or relative and meet the rules to be head of household, don't be shy. It often helps you more than single status. Add your dependents with their Social Security numbers and relationship. If a child qualifies for the child tax credit, you'll note it here. Later, the math will live on an attachment, but the person lives on page 1. The next scene is income. Wages go in neatly from your W-2. This is the number in the wages box, not the gross salary you remember from your offer letter. Interest and dividends enter from your 1099 INT and 1099 DIV. If your dividends include qualified amounts, your software or worksheet will compute the favorable rate later. For now, enter the totals where they belong. If you sold stocks or crypto, you'll refer to your 1099B and the supplemental detail your broker provides. Short-term and long-term results get separated because they're taxed differently. Those calculations live on Schedule D, but the final figures land back on 1040. If you received unemployment, there's a form for that too. If you took money from a retirement account, your 1099R tells you what was distributed and how much is taxable. If you were self-employed, your freelance income is reported on Schedule C, and you'll bring only the bottom line profit or loss back to 1040. Rental income? That's Schedule E. Farm? Schedule F. K-1s from pass-through entities feed into their respective schedules and pour back into 1040 when the dust settles. Right after the income tour comes the gentle world of adjustments. Reductions to income that you can take even if you don't itemize deductions. Traditional IRA contributions, HSA contributions, self-employed health insurance premiums, half of your self-employment tax, and a few other items live on Schedule 1. This is where gig workers exhale. Schedule SE calculates your self-employment tax, and half of that becomes an adjustment that reduces your income on 1040. If you paid student loan interest and the rules haven't changed for your year, that can show up here as well. These adjustments lower your adjusted gross income, the magic number that drives phase-outs and eligibility all over the return. Once your adjusted gross income is known, you face the classic fork in the road, standard deduction or itemized deductions. Many filers choose the standard deduction because it's generous and simple, and the numbers change by filing status each year. If your deductible expenses are larger, think mortgage interest, state and local taxes up to the yearly cap, charitable donations, and certain medical expenses over a percentage of your income, you can itemize on Schedule A instead. There's no shame in choosing the standard deduction. The law literally invites you to. What matters is picking the bigger, legal number. You subtract the deduction from your adjusted gross income and land on taxable income, the base on which the tax table will work its magic. The tax itself is usually calculated by software now, but it's worth knowing what it's doing. Ordinary income is taxed at progressive rates that depend on your filing status and where your last dollar falls. Long-term capital gains and qualified dividends receive their own, typically lower, rates. That's why the earlier separation mattered. If you have self-employment income, there's a separate calculation for Social Security and Medicare tax on those earnings. Some years bring special line items on Schedule 2 for alternative minimum tax or other additions. If you've never heard of those, you probably don't have them, but your software will warn you if you do. Now for the fun part, credits. Credits reduce your tax bill dollar for dollar and are often the difference between owing and smiling. The child tax credit and the credit for other dependents get computed on a worksheet and an attachment. Their totals reduce your tax on $1,040. The Earned Income Credit is a powerful support for lower to moderate earners with qualifying children or, in some cases, without children. If you think you might qualify, answer the questions honestly and let the schedule decide. Education credits like the American Opportunity and Lifetime Learning Credits can help if you paid qualified tuition and fees. That math lives on Form 8863. The Savers Credit rewards contributions to retirement plans at certain income levels. Child and dependent care expenses can produce a credit when both you and, if filing jointly, your spouse worked or looked for work while paying for care. The provider information goes on its own form, and the credit flows back to $1,040. There are energy-related credits some years if you made qualifying improvements. If you did, keep invoices and read the specific year's rules carefully. Credits first reduce the tax you calculated. Some are non-refundable. If they zero you out, they stop there. Others are refundable and can push you into refund territory, even if your tax was already reduced to nothing. Your $1,040 will show the grand total of your credits and the new, lower tax. You're not done until you reconcile payments. All year long, money has been sneaking toward your tax bill. Withholding on your wages shown on your W-2, withholding on certain 1099s, and any estimated payments you made each quarter. Enter those exactly as they appear on the forms and your bank confirmations. If you bought Marketplace health insurance, there's a premium tax credit reconciliation that lives on Form 8962. You compare what you were credited during the year with what your final numbers say you should have received. If you took an early distribution from a retirement account and owe an extra tax, that gets computed on a separate form and finds its way to $1,040 as well. The final act is arithmetic. Total tax minus payments and refundable credits equals either an amount due or a refund. If you owe, the form will offer you the chance to add a little to next year's estimates, set up a payment, or even split payments among accounts. If you're getting a refund, you can direct deposit into up to 3 accounts or buy savings bonds if that's your thing. Along the way, watch for the side doors that open only if you need them. If you had more than a small amount of interest in dividends, you'll attach Schedule B. If you sold investments, you'll attach Schedule D and, when necessary, the statement from your broker that details every trade. Don't make the government guess your basis. If you were self-employed, you'll complete Schedule C to report your business income and expenses and Schedule SE to compute your self-employment tax. Be honest and specific on expenses. Advertising, software, supplies, a portion of your phone and internet, and travel tied to business can be legitimate, but dinner with your roommate is not client development just because you discussed your dreams. If you use part of your home regularly and exclusively for business, you can compute a home office deduction with either a simplified square foot method or actual expenses. Keep photos, measurements, and utility records in your file in case someone asks later. If you contribute to an HSA, you'll complete Form 8889. If you contributed to or took from an IRA in tricky ways, Form 5329 might appear. None of these are scary when you treat them like puzzle pieces. They click into the 1040 and the 1040 collects the results. A word about timing and tools, because both matter. Most years the filing season opens in late January and the deadline lands in mid-April, with small shifts for weekends, holidays, or disasters. If you can't file on time, you can request an automatic extension to file later. Just remember, an extension is extra time to file, not extra time to pay, so a reasonable estimate sent with the extension is your adulting move. If your income qualifies, the IRS Free File ecosystem and many state programs offer cost-free e-file options. If you make too much for those, reputable software still beats guessing with a paper form. Keep in mind that tax rules evolve, so if you're working off an older article or memory, sanity check anything that sounds like a fixed dollar amount or a brand new credit. When in doubt, read the current instructions, or better yet, let current year software do the math while you provide the facts. Common trouble spots deserve an ounce of prevention. Don't transpose social security numbers or bank routing digits. That's the slowest way to turn a happy refund into a detour. Don't forget to report every 1099, even if the amount feels tiny. The IRS gets a copy too, and computers are excellent at matching. Don't enter stock sale proceeds without entering cost basis. That's how people accidentally tax themselves on their entire investment instead of the gain. Don't skip state taxes if your state has them. Many state returns mirror your federal numbers and can be filed right after. And don't file from a coffee shop Wi-Fi without a VPN or secure connection. Identity theft loves tax season almost as much as you love espresso. When you've walked the whole path, identity, income, adjustments, deduction choice, tax, credits, payments, pause and read your own return like a stranger. Does the story make sense? Do wages on 1040 match your W-2s? Do investment sales match your broker statement totals? Does your business profit on Schedule C feel plausible next to your bank deposits? Do your credits have documents behind them? If something feels off, it probably is. Fix it before you file. Later fixes are possible, but refiling is less fun than getting it right. File the thing. E-file with direct deposit if you can. It's faster, cleaner, and less likely to wander. Save a PDF of everything you submitted, plus the confirmations, into that year's folder. Keep the documents that support it. W-2s, 1099s, broker statements, receipts for business expenses, donation letters for at least the standard audit window, and longer for basis documents like home improvements or investment purchase records that could matter years from now. Create a tiny ritual that turns tax season from dread to routine. Once a month, reconcile your bank feeds, download platform statements, and drop them into your year folder. When April returns, your past self will feel like a genius. Will feel